I'm going to welcome you all this afternoon. My name is Jenny Tooth, and I am Vice President of Business Angels Europe. And my other day job is Executive Chair of UK Business Angels Association. So this is a really great community to see this afternoon, and thank you all so much for joining us. This is an important opportunity for us all to tell you more about how you can harness artificial intelligence to boost your angel investing. And this is part of a series of masterclasses that we have been organising with a special target on our colleagues in Central and Eastern Europe, who we've been working with for well over 18 months now to help support and build an active and very, I'm sure, very dynamic angel community across Central and Eastern Europe. And we have been wanting to pass on insights and experience from more developed parts of the angel market, but very much an opportunity to build new connections, new relationships, and new opportunities for investing across the whole of Europe. So we have also colleagues here from other parts of Europe to join us this afternoon. This is really your chance as well to not just listen this afternoon, but we do hope that this will be an interactive session and that you'll join in, bring your questions and your comments and views, and I'll be opening it up to questions. So if you want to, you can put some in the chat or the Q&A, but I would really recommend that actually when we come to the Q&A session that you'll raise your hands and actively ask your questions as well. So we have a wonderful set of speakers with us this afternoon. And to open the session, we have a very dear colleague and really experienced person in venture and in entrepreneurship and innovation, and who has been for many years a very senior player in this area. He's Professor Thomas Hellman. He is global Professor of Entrepreneurship at Oxford Said Business School, which is part of the Oxford University in the UK. And Thomas has been really looking at this issue and its impact on venture capital and angel, and how this can really help to turbocharge our investing, but also looking at it, I think, looking at both the challenges and the opportunities to really integrate and use AI in your investing. So I have my great pleasure in introducing Thomas, and then after that we will be also having two other very great speakers who I'll be introducing to you shortly. So it's my great pleasure to have you, Thomas, here today, and to invite you to present your thoughts, and we have a few slides to show as well. So thank you very much, and over to you.
Thank you everybody. I hope you're having a wonderful afternoon. This is a fantastic gathering, and thank you, Jenny, for inviting me. I'm going to be sharing some thoughts about what I call AI augmented investing now for the angel community. And in the second part, Armindo and Alain are going to give us the practical view. So in some sense, my role here is to set some concepts, maybe ask some provocative questions, and share some initial insights from a line of research that I've been pursuing for the last 6 months, where we were focusing, in all honesty, not the angels, but the venture capitalists. And we were spending we spent a lot of interviews. We talked to a lot of people in the industry about how AI is augmenting the processes of venture capital. So we're not going to talk about what kind of AI companies we're investing in. We're asking how does AI change the process of venture capital? Now, by implication, it's also going to change the angel process. And so I'm going to leave, hopefully, some provocative thoughts at the end of this talk about what it implies for the angel community and how do we think about that. You will notice that there are some similarities anyway. Venture capitalists and angels have always been, close cousins. If we go to the next slide and we click through once, this is a very simple sort of description of the investment process. I think you're all familiar with. In the angel process, sometimes this process is a bit shortened, and sometimes they invest, on a handshake after a first meeting. But different aspects of this process, certainly apply. And the core of the research that we've been doing, and I'm sure Armindo and Alain are going to give us some real rich texture and details, around that. But the question we've been asking is, how is AI impacting these key stages of the investment process? So I'll be relatively brief, but the key insight that is very apparent for the moment is that the more you are on the left-hand side of the process, the more intensive the use of AI is. So if we're talking about sourcing and screening, AI tools are increasingly being used for lead generation, for pitch analysis. Turns out that LLMs are obviously extremely good given the sort of uncertainty in the use of verbal information. AI is making a big difference, and it'll be worthwhile to get, into the details. I won't do that now. When it comes to the due diligence stage, that always works slightly differently among angels than the venture capitalists. Venture capitalists, for various reasons, but including the fact that they have LPs, need to document the due diligence stage a little bit more tightly. Various kind of new techniques are being used. Everything that's being used at the sourcing and screening stage often, also applies to the due diligence stage. Networks graph are becoming very important. So if you're trying to figure out who's going to do the due diligence, who can I talk to, who actually understands something about that business plan, AI-enabled network graphs are very good for that. People are beginning to use meeting analytics. I think it's still the early days for that, but you basically record the video and then you let AI decide whether the person was friendly, honest, or hesitant, or all of these kind of characteristics. I think that's still early days, how much people rely on essentially video analysis. Most of the AI is really large language models. But then, a few other things are beginning to become more prominent. I have a big red arrow in front of the investment decision, and this is where we found the most interesting tension. When we ask venture capitalists, would you like AI to make the investment decision? The answer is always no. And possibly with this little bit of an offense is, how dare you suggest that my job can be replaced by an AI engine? So the industry is very clear for the moment that investment decisions belong to humans, not machines, except we found one who told us, no, I've automated the process. I have to retain anonymity here, but there are a very, very small number of players who are beginning to automate the process. Importantly, they're not traditional venture capitalists. They are basically follow-on investors. They never lead a deal, but they try to get, on the basis of AI, co-investments as a non-lead investor, and basically, say where they want to play. Basically, that's an exception. It's an interesting trend. It suggests that leading is out of question. Following might be maybe AI-based decisions are going to be on the follower side to begin with. It doesn't stop here. The debate, and I think where the debate is particularly rich, is, do you let AI into the investment committee, the IC? And this is where we get real variation. There are some venture capitalists who says absolutely not. It's a conversation among humans, and we still look at each other in the eye, and AI helps to prepare the documents, but the decision in the IC is made entirely by humans. Again, we're seeing some deviations, the beginning of it, where they're saying, well, yes, but we've got the AI machine next to us, and we do ask the AI some questions occasionally. Some of them have started saying, well, we'll give them a vote. It doesn't count, but we'll let them vote. Or we give them a minority of votes. So the real sort of breaking point for the moment, the debate is on the investment decisions. I have been surprised how little AI is used for the ongoing support, what happens after the investments. I think there's more potential there. helping people to think through follow-on funds, through exits, obviously through all sort of industry networks. We're not seeing a lot of it yet, but to be honest, parts of that process, I think, lend themselves to automation. Let's move to the next slide, please. So the hardest question in all of this, and where the red arrow was, is how much do we trust AI to make investment decisions? And then, obviously, we first go back to, well, how do we normally make investment decisions? And this is extremely well known in the angel community, gut feeling. Now, I'm going to give you a framework. This actually comes out of some respected academic work that puts a little bit more structure on the word gut feeling and intuition, because they're often used interchangeably. This framework basically makes a slightly different argument. I think it's worthwhile to spend 2 minutes on that. It says that the investment process of angel investors, and this was based on studies of angel investors, is driven by gut feeling. But don't confuse gut feeling by intuition, because intuition is an input, whereas gut feeling is an output of a deliberation process. The inputs of that deliberation process are cognition, rational thought, data, information, as well as intuition, gut feeling. This, for those of you who are familiar with it, goes back to a very famous book by Nobel Prize winner Daniel Kahneman, who talks about fast versus slow thinking, or type 1 versus type 2 thinking. The framework that I'm describing is actually about gut feeling, comes from Laura Huang. She's just written a wonderful book. I just started reading it. You already know it, Mastering Your Intuition. It is based on her work on angel investors, but then other people as well. But the key thing is, she says gut feeling isn't just this intuitive fast thinking. It's actually the outcome of the interplay between cognition and intuition. And there's work involved before you make the gut feeling decision. Why am I mentioning this? Because there are two very different views about how we're going to make decisions, investment decisions, among angels, among venture capitalists. One is sort of the rational automation. What I said earlier on, very, very few players are beginning to basically automate investment decisions. That basically says cognition is getting better because of AI, intuition isn't. Therefore, we're just going to switch to a cognition-based and therefore more replaceable, a model more replaced by AI. And that's going to be basically lead eventually to AI engines making decisions. The other one is very different. And I think I'm much more excited about the second one. AI augmented intuition says cognition is getting better because AI is getting better. How about we actually improve ourselves, our gut feeling, and maybe our intuition, because we're going to have a tool that allows us to check our gut feeling and get feedback. For example, AI is very good for comparing current investment decisions to the decisions that you made 6, 12, or 18 months ago. AI is very good for comparing how in a team, if there is say, a syndicate of angels, how different people have made different decisions in the past. What that will do, and what I think is something we have a choice of as an angel investor, is to strengthen our gut feeling and actually say we're going to remain human-based, but we're going to get you AI to make our gut feeling stronger. So this is one of the messages I really want to leave you with, that here is a learning opportunity. Don't just sit back. If you think gut feeling is what drives it, get better at it and use AI to learn about your own gut feeling. Next slide, please. Now, in this context, one of the problems we're encountering in venture capital, and angels are going to face the same dilemma, is that the angel decision, at the early stage, the decision is essentially about people. We're picking founders. I mean, there's a long debate about are you picking ideas or founders? Most people think that the founder dimension is more important, at least if not more important. Well, great. Gut feeling is how we pick founders. We get comfortable with the idea. How good have we been? Well, gut feeling has been good, because all good decisions in the angel world haven't been made with gut feeling, more or less. But it also left a legacy of biased investment. Now, Jenny has been a real voice in the UK and in Europe for pointing out that, we have some really serious biases. Gender and minorities have been ignored in this market, and there's a lot of research there. I myself have done some research on crowdfunding platforms where we find this very strong evidence of assortative matching. Put simply, Male investors invest disproportionately in male founders. Female investors invest relatively more in female founders, although on balance they actually have a much more balanced gender view on investment pattern than male. The question is, will AI reduce or increase them? I think we have a choice. If we're thoughtless about the way we use the AI engine, they will actually reinforce the biases. If not, I think we can use these tools in a very interesting way. The moment we want to use AI to evaluate founders, we are forced to put a framework on something that has been entirely undefined. I spent 20 years asking venture capitalists the question, if people are the most important criteria for making an investment, what framework do you have for evaluating founders? And for 20 years, I got a blank stare as an answer. They never had a model. Things are beginning to change. And literally, we're talking about the last 2 or 3 years. I think this is an opportunity. AI will force us to give the screening criteria, to give the evaluation criteria. We're not going to trust AI with doing the founder evaluation itself, but it's going to force us as investors to be more thoughtful about what do we think is important. We don't have to agree on these things. I think we're going to have lots of opinions, but I think it's a really positive example of AI teaching our gut feeling to be better, because it forces us to put some structure on what we consider a good founder team. Next slide, please. Just one point on that is it's very tempting when we build these AI models to basically create a ranking and say this is the best founder and this founder doesn't score as well. I think there's going to be a real problem with a uniform ranking. I invite people to think about this in a pluralistic way, which is certain combination of traits and skills work well together, but we don't have to rank everything. So there's going to be some real challenges to what we consider good, and my point is more than one thing could be considered a good team. Okay, next slide. I know I'm only have a limited amount of time. Here is another really important message. Actually, go back one please. One of the reasons why we thought people don't want to use AI for venture capital or angel investment specifically is that angel investing, we've always been at the frontier of new innovation, and you can't just think like everybody else. There is a notion that angel investors have some aspect of contrarian belief. So here's my little picture of contrarian belief created by ChatGPT. Obviously, I'm sure you can see from the type of picture it is. The point is, if you make an angel investment, you're basically almost always a contrarian, which is you think that this is actually worth a shot because everybody else can see why the investment isn't going to work. It's very easy. You can always find a reason why not to invest in a company. So angel investors are inherently somewhat contrarian. Then we said, well, computers will find it really difficult to be contrarian. And we were wrong. Computers are very good. LLMs are very good at being contrarian. In fact, if you can now push forward the slide, if you're asking ChatGPT to come up with a contrarian view, it will generate one. If you ask it for 2, it will generate 2. If you ask it for 20, it will give you 20 contrarian opinions. It has no problem. It's actually very good for generating contrarian opinions. And you end up with a picture like this, but you have to figure out whether it's the dark green or the light green. They're all contrarian opinions, all reason for making the investment when nobody else wants to make it. But AI does not have conviction. So I'm making an important distinction between being contrarian, which is easy for the computer, versus having conviction in your contrarian beliefs, which I believe only humans, at this stage at least, only humans can do. So it does bring a new dimension. I think it gets to the core of what angel investing is about. I think I've got one more slide and probably just a couple more minutes. The venture capital landscape is changing very rapidly. I'm not going to go into the details here, but we're seeing all sort of changes. I think one of the interesting things we noticed is the rise of solo GPs. That's going to blur the boundaries between angels and VCs again, because if we have a single person, that's not very different from a super angel. Let's move on. Just in the interest of time, I really want to get to the last slide. I'm actually going to skip these 2 points here. And stop here, please. I just want to leave a little bit of a provocative thought. What is the future of angel investing? Where are these angels flying to? I am going to give you 3 scenarios, and I hope we're going to get questions on these, because I really try to sort of just think through logically within the next decade, let's say, where are angel investors going to be? Now here, this is why I will never be invited again into this forum. You can have the first bullet point, please. One prediction of the future is the angel extinction. There is a scenario where you can think that the venture capital, the professionals, are willing to spend the money on building the tools, are building out basically a tech stack that is not entirely cheap, and a lot of them are focusing on seed stage and pre-seed stage and first check, and we're seeing a proliferation of VC models that are invading what has traditionally been angel turf. And so I know you don't want to believe this story. I don't really believe it myself, but it is on the horizon. It is a possible future of angel investing is that basically VCs will take away all the good deals because they've got the AI and the angels can't keep up. Now, thankfully, I have 2 more scenarios because I don't want to leave you completely depressed. And so let's have scenario 2, please. This is a non-obvious one. I called it parallel universes, but it's based on real research. I did a study about angel investors, and we had some very difficult to get data from the province of British Columbia in Canada. There's a tax credit there. And what we found is that in the absence of AI, this is data that's now 10 years old and more, we found that companies that get their first check from an angel are actually likely to remain on an angel track. And the ones who basically skip the angel stage, they may have some family and friends and stuff, but they basically go to the venture capital route, are on a venture capital track, and may never get angels. So we actually found, now the data isn't 100% like that, but we had surprisingly strong trends to basically saying angels and VCs invest in different companies and they live in 2 different universes. That could become, that distinction between the angel and VC world could become more clear with AI. And so not quite angel extension, but it just says angel investors and angels are going to focus on a different set of companies that VCs don't want to do. The third version, now let's see if you like this one, scenario 3, please, is what I call angelic cyborgs. It's meant to be a joke. But it means that basically angels adopt AI actively without giving up their angel identity, their mindset, and their interest and their specializations. I think scenario 3 is very much what I hope. I think it definitely will rely on this key notion that I tried to establish before, which is AI augmented gut feeling. In the absence of that augmentation, I'm worried that the angels are going to be left behind and going to make poor decisions and basically get all the lemons. But I think there is a scenario where angels make a smart use of AI without losing their angel objectives, their values, and maybe their conviction, which we talked about earlier on. That's all the time that I have. Sorry if I went over, but hopefully I provoked a little bit of thought with these 3 scenarios. For those of you who are interested, there is research. I've done a whole bunch of research on some of these topics that I just put into the references in case anybody's interested. Thank you. And over to Alain and Armindo.
So
back to Jenny first.
Well, first of all, thank you, Thomas. That was great. And by the way, I don't know how many of you feel about this, but I've certainly had quite a lot of gut feelings along the way during Thomas's talk today. And since we have so many angels in the room and some VCs, I think this can be a really interesting debate. So this is where we are going now. If anyone has any immediate questions, I mean, do put them now, but Thomas will be joining us for our Q&A afterwards. But Thomas, I think we are now, this is a really interesting moment for us because first of all, you've shown where angels can go and where angels maybe could go, but also that, that venture capital can also literally now do everything that angels do? I think most of us would think not. And I think we're about to have a really good debate on that. I'm absolutely delighted to be joined today by two fantastic investors who are going to really talk about the way they would approach this. But I think the context of what you have just said, Thomas, and the way that AI is being used effectively, but areas where in fact you identify could actually be problematic is also important. And I'm really keen to hear how our two investors are approaching the use of AI throughout the whole process, or maybe just part of it. So to join us today, we have Armindo Costa. And Armindo is actually part of Chamaeleon VC, and a really active investor himself as general partner, Portuguese, but incredibly international. And he will be hopefully introducing himself, saying a little bit more about yourself, but also most importantly sharing your views about everything that you know about your VC world of data focused investing. And then we're also joined by Alain Pujol. Some of you may have already met Alain, but he is co-founder of France Angels, co-president of France Angels, and also a really active player and board member within Deep Tech Angels and Healthcare Angels. So working with some really exciting syndicates and a big angel community in France, and more widely. So it would be great to hear from Alain too this afternoon. This is an opportunity for you to hear from them, but also for you to then be putting your own questions, comments, and views. So delighted to have you both here. And Armindo, just really starting with you to introduce yourself a bit more, the approach you're taking at Chamaeleon, and really maybe reflecting on that whole, investment process and journey that Thomas was also talking about, and how you see this from your point of view. So over to you, Armindo. Thank you very much for joining us.
Thank you, Jenny, and thank you for the invite. About myself, I've had 3 careers before venture capital, and they all influence what we are doing currently at Chamaeleon. I've been a mathematician in the UK, pure mathematics researcher for a number of years. I've been also a senior quant at Goldman Sachs, challenging all the models used by the firm, proprietary models, and informing the board in the most complex transactions. And I've also been an entrepreneur, founder of a big data company as well. And these 3 things influence a lot what we are doing at Chamaeleon. Chamaeleon, it's more than an AI-driven fund. It's a data, AI, and quant-driven fund. And what I mean by that is that we've built processes to do data acquisition, extraction, transformation, etc. at scale. We work with more than 200 billion data points. We get those data points daily, weekly, monthly. There is a lot to be said about, you already know that if you're talking about AI, that garbage in, garbage out, right? So I've seen a number of studies that don't make much sense because the data is highly contaminated. There's survival bias and things like that. We are AI-driven because we've built a number of specialized engines for several purposes. Some to feed the third part that I will mention, which is the modeling part, to enrich data, to segment data, which is another very understated point by many folks, and to help in our operations all across our functions. So from deal access all the way to portfolio management, to exit strategy, to value add to our portfolio founders, to value add to our LPs. And Chamaeleon is those 3 things besides being a Silicon Valley VC and with very high pedigree people involved in our firm and in our processes. So in Chamaeleon, what we do is, built on these 3 aspects, is we end up training models that are very large scale, right? And those models do a number of things. They don't just score companies or rank them. That's a byproduct of what we do. They are more like structural models that I think to the point that Thomas was saying, not only help us to select companies, but also make us investors much more qualified, because it's all about, without this type of approach, it's all about human pattern recognition. It's all about, where were your success stories, etc. There is, besides everything we gain in terms of detecting startups having access to deals, etc. There's also the part of us becoming much more qualified as humans to be part of that process. We generally rank more than 6 million companies, and then we engage, a part of that is in thesis, and then we engage automatically with the top 1% according to that model. So it's very AI driven. It's not just saying, oh, this company has these properties. It's more like 90% of our funnel is outbound and comes from this type of machinery, and 10% comes from our human proprietary networks, which is the traditional advantage in VC, right? Either through branding or through access to networks, etc. So that's, I'm happy to go in more detail on that. That's kind of a first overview of what we do, and the fact that we use AI not as a black box to simply find companies, but that we build a number of specialized AI engines that are then integrated into a large statistical model. And the collection of all these things is what we call Mantis. Mantis is our platform, our infrastructure, our models, and also the team that runs all of that.
Great, thank you. Just a few questions on that.
Yeah.
I mean, is that because that's such a huge, you have such huge amounts of data that you're obviously, whacking through. Does this mean that your eventual funnel is so much bigger than you would normally have had as a conventional VC? In other words, your actual, choice of opportunities is just so much bigger, or does it narrow it down to what would have been a normal amount, but highly, highly curated?
It's both things. So we ran these on more than 6 million companies, roughly 1 million, 1.5 million actually are opportunities that we could possibly invest in, and then we engage automatically with the top 1%. So you can see our funnel is having 10 to 15,000 leads a year, and those 10 to 15,000 leads are extremely curated, right? And from those 10,000 to 15,000, we then get to pick the 5, 6, 7, 8 that we find more interesting in that year. So the cut is much stricter than 0.1%, for example.
So, and then on that, does that mean there are huge patterns now that you're seeing in terms of country sources or sector sources? I mean, how is that bringing new opportunities to you? Are you finding opportunities in countries you've never looked before, or is this changing your view on sectors you're investing in?
We have investments in the Bay Area, obviously, but we also have in South Korea, in Singapore, in the UK. So it's really geo-agnostic. It's mostly vertical agnostic as well. And then it gives you other advantages, right? Once you do the segmentation correctly, which is one of the hardest parts, that also helps strategy, right? You may want to kind of run away from specific verticals because you actually have a macro thesis, because you're actually observing things that make you want to avoid those verticals, and you may want to double down certain verticals. So it's not just, the model came up with this, but actually there is a symbiosis between what is the portfolio strategy and what the model is saying, because once you actually are able to map things at this level, you can double your focus on some areas and remove focus from another area. So it also helps the more fundamental, traditional, strategic thinking on investment side.
And I have to ask that question because I've already been set up for it by Thomas. Is this changing your view on gender as well? Is this giving you a less biased view on gender?
Yeah, we have data on that we're looking at. I don't think you can answer it globally. It's in different industries, right? In different verticals, in different areas. the model has led us to have a very kind of gender diversified collection of portfolio founders. I don't know the precise numbers now, but I wouldn't be surprised if it's 50-50 or even actually more women than more female CEOs than male CEOs. So it helps us with that. It also helps us understanding, which kind of background, like in certain industries, you can find statistical significance in terms of, for example, having had previous being a seasoned founder, having done companies before. We find nuanced things like, does it matter more to be, I'm sorry, I'm digressing a bit, but just to give you more a richer answer. In certain industries, it matters more that you have been an early team member in a company that really scaled than just a repeated founder. That creates other challenges. So now you can't just get data now. You need to get data to the last 20 or 30 years. You need to have deal data. You need to understand if that data is correct. And then you need to be able to map companies to markets and to verticals, etc. So we get those nuances. So we fit our model, gender, age, curriculum of the person involved, etc.
No, thanks. That is an interesting approach. Thank you. So I'm going to ask you the $1 million question now. Are you using AI to make your decisions?
Yeah, we're doing, but in a very kind of symbiotic way, right? So AI plays a huge role in terms of what the model puts in front of us. That 1%, which is different from we just get information and then the human decides. Like the model is already saying it's this 1% that you're going to look at, right? We've had investments where it was purely model driven. We've had that both. We decided that the part of our fund would be, the larger part would be the model I just described. A smaller part would be the model decides and we check for red flags, which is a total inversion of what most folks would be doing. We've also had that. We've had a super successful investment that came not from the model, but from the scientific framework, from specific backtesting we did on one specific factor. And we found, like in certain industries, that was very, very highly predictive. And we ended up investing in an AI infrastructure company that grew 10 times in 1 year. Like we did Series A, and within the same calendar year, they're doing Series B now. So absolutely, yeah.
Really interesting. But I mean, obviously that kind of boosts your confidence to kind of then reinvest as you did, in terms of that, having used that. Yes. That data.
Having said that, I don't think it's a great idea to do an AI black box and investing in companies. People often miss the fact that if you're gonna tackle an unstructured problem, through AI, you really need a lot of data. And if you don't, and if you actually know something about the structure of the problem, you actually shouldn't be using AI as the core model. You should do something else, and then AI plays different roles. It can enrich your data, it can segment your data, it can create new features, etc. But I've seen VCs that what they are doing is, they run some machine learning model and they get to some accuracy and they say that's great. Well, that's not great. That's how you lose a lot of money. And my background in quantitative finance also tells me that if you have a great predictor of specific companies, but you don't make the entire portfolio part of your model and you don't understand risk, you can have best-in-class predictor and you bleed a lot of money, bleed a lot of P&L. Because when it's wrong, it's going to be wrong everywhere, and a number of things that we could be discussing.
Thank you. And on that note of caution, I'll probably stop right now. And I'm going to introduce Alain. So Alain, great to have you here. And obviously you've heard a very, very data-driven approach here, which is obviously now being perfected through Chamaeleon there. But obviously turning to you now as an angel, an active angel, working for many years as an angel and building and working with angel syndicates that are sector specific. Can you say a little bit about your approach to AI and those of your fellow investors around you, and perhaps again taking account of what Professor Hellman Thomas said, in terms of where it really works and where you may feel you don't want to use it. So over to you.
Okay.
Thank you.
Thank you, Jenny. So first of all, thank you for inviting me. It's my great pleasure to be with all of you. I think that we are above 80 people right now, which is good. And again, as a background, so I used to work in large pharmaceutical company for 15 years, then had my biotech company, and then developed in Europe a US company in drugs and medical devices. And since then, I'm an angel investors in healthcare. And so basically, AI, I will start with that. AI for healthcare is obvious. And every day we see things that are amazing, new discoveries of drugs, way to accelerate research. So, and there is no question about using AI in healthcare. But then the question is, how can we use AI to boost angel investments? And that's the key question I like to answer. So first of all, France Angel is really a federation of syndicates. We are in France about 50 syndicates, a little bit more than that. And we have sector focus syndicates like Angels for Health. We have also another one, which is Defense Angels. So we have about 10 of them. And we have also angels very close to the entrepreneurs in the territories, and which is really important. And also we have a network of Farm Business Angel. You know them, Jenny. Women investors investing in startups, not only funded by women entrepreneurs, but by everything. Again, the way we are currently using AI is really, as Thomas mentioned, in the deal sourcing, and then in the due diligence automation, in valuation, that what Thomas said, investment decision, and then also the ongoing support. And to be fairly honest, at this stage, and actually I'm quoting really a seminar we had in Bulgaria, that was a retreat. I was attending that a month ago, and this was amazing, the data we had. So saying that probably the adoption of AI in deal sourcing is 82%. Very precise, due diligence 74, valuation 61, and then portfolio monitoring a little bit less, but around 60%. And I should say that right now, the use of AI in syndicates is very different. You might have syndicates that are using extensively AI for deal sourcing, not the way our friend is using it in the Silicon Valley, but really helping to scan, to really automate some discovery and ranking as well. And so due diligence is also very important. And again, valuation is also used, but a little bit less. And really, portfolio monitoring is not used. I mean, less used also. And the key question is also how to train AI model with your data, which again raises another question. Should you share data or not? And privacy is really so important. And again, our syndicates really have their own data, and we are not really sharing that, or even between countries. So that's really what I wanted to say. And again, back to Thomas' question, I think that the three scenario. I had a fourth one, and this is what we are doing every day, is that the BA or are really early stage. And I would really not oppose BA or VCs or even club deals, but they are really working an early stage phase, I mean, early stage VCs. So we are really working every day with them, and we love to work with them. However, we know that for Series A, B, and C, other people will come. And that's really where we business angels are not investing. We might be the chair or the board, sit at the board of these scale-ups, but again, we are not investing anymore. So I think that's really, for me, it's early stage and then later stage. I'm not hearing you, Jenny.
Yep.
Like I am
Jenny?
on mute. I'm better
Okay.
not on mute now, I hope. No, that was
Okay.
really, really interesting. Thank you so much. And I just wanted now to ask you, I'm just going to check if my mic is on. Just checking that you can hear me. Can you hear me okay?
Yes, I can hear
good.
you.
Yeah,
No problem.
I'm just really going to ask you now about the investing process, because obviously one of
Okay.
the areas, you know, we've talked about angels, especially using their gut and especially using all their kind of instincts, and the experience and skills and knowledge that you've developed over so many years. Do you think there is any space for AI, as a little bit also, as Armindo was saying, to kind of checking against your decisions, or
Yeah,
do you feel,
I'm sure there
yeah,
are plenty of space. But again, I was interested also by Armindo just being sector agnostic, being region agnostic. So
yes,
that's great. That's amazing. But we are doing the opposite. So we are really sector focused. And doing so, we help other investors to really then make their own decision. So again, in healthcare, for instance, regulatory is very important. The success of different class of drugs, the biotech drugs, is really important. The understanding of technology is really very important. And we are helping because we have experts in Angels for Health. We are 150 people, and we are helping the other investors in France, but also in Europe, to make their own decision, knowing that AI can really help us again to discover new things, to discover new competitors, to really better understand trends. And this is, again, the way investors will be more qualified using AI. No doubt about that, no doubt.
yes, thank you. I mean, for me, it strikes me that because we often say one of the challenges is we just don't have enough experts in healthcare and some of the key sectors that maybe help people make those decisions. So having that additional kind of level of knowledge brought into your syndicate may be helpful alongside your own deep sector knowledge. So perhaps it does help angels who have less deep knowledge themselves of the sector, you may think. Yes.
Yeah, but again, I think that being an angel, you get to know people, and I was really happy to see my Bulgarian friends some months ago, and again, being happy to see other people. I mean, next week we'll be in Brussels, so and I think that investment decision is also relying on people, talking to people, and it's not only some sort of crowdfunding thing, and then you just get the best deal ever. This is not the rule of the game for us. It's really knowing people, but again, using AI to help us to broaden our experience and to have better insights.
Yeah, thanks very much. And Armindo obviously was investing right across the world and getting deals. You're getting deals, Armindo, from all over the world and so many different sources of opportunity. One of our biggest challenges, as you know, as angels, is how we successfully do cross-border investing, both finding the right deals and creating the right environment for people to, share and invest. Do you think there's a role for AI in supporting cross-border investing, which has been a big one of our focal points here in our work on ESIL?
Absolutely. I mean, in this day and age, of course, from the moment that you can generate an automated pipeline and you can actually standardize these processes, your reach is global, and then you need to decide at which scale you do that, right? So it's really human led, or you're going to engage automatically. And right, we found opportunity. One of the investments I was telling you in South Korea, like totally under the radar, right? And we didn't know anyone there, right? And we have relations with Korean VCs. It wouldn't have helped much because they also were not aware about this opportunity, right? So in this day and age, of course it does. Back in the day, probably not. You need some sort of budget to attend conferences, to build international networks, etc. But nowadays, and you're not even constrained to, I have to go there and meet the founder, or the founder or needs to come here. Like, you can do all of that at this distance. Yeah, of course.
Yeah, thanks very much. Thomas, you've joined the debate now. I mean, you've listened to some of the points that Armindo and Alain have raised. Any reactions from your side?
Absolutely, I thought they were fantastic, and I sort of wanted to just dig deeper into a couple of things. You can hear me? Yeah.
Yeah.
So I mean, first, I just want to echo Armindo's point about garbage in, garbage out in terms of data. And Armindo is obviously very thoughtful and careful about the data. And that's really, essential. Now, Alain was mentioning actually something really interesting about privacy. And I think there are regulatory aspects to the work that are going to matter about GDPR. But I think it goes beyond what Alain was saying, because traditionally angels know a lot about the people they've met. And there's sort of a certain professional intimacy. Sorry, there's a voice.
Yeah, can I just say, there is maybe someone speaking into a microphone or having a conversation somewhere, or maybe your AI assistant is having a conversation somewhere. But do you mind, whoever that is, tuning out for the moment? And do raise a hand if you have a question, or put it in the chat. Thanks.
Lovely, lovely. No, so if it's okay, I'm literally going to turn this into a question to both Alain and Armindo. But which is there something in the personal relationship between investor and company that can or cannot be captured by AI? Is that relationship easily mapped into data, or is that relationship really so different that it's just not suitable for AI agents to pick up? I'd love to have your thoughts.
I guess I can start. Absolutely. There's many, like, even if you have this type of approach, at the end of the day, if you're going early stage, particularly if you're going, angel round or seed or whatever, a lot of it still has to do, well, first of all, with the grit of the person. Like, that person will not give up. That's one of the driving factors of actually having success. Will that founder be a person that will be easily to deal with? Maybe this is less relevant for angels, but if you're a VC, you're expecting to sit on the board, if you're a lead investor, etc. Like, how will that work? Does that person have the type of gravitas, communication, expertise that will attract talent to their startup? Like, it's not just, this is a good idea and this is a good market, right? There's so many human skills, right? And one should not try even to build a model for that, right? Again, because you need to work on where there's digital crumbs, right? Where you actually can find data that has some signal and then use that in your models, right? Once you go to factors that are not digitized in some way, that you will really only find by interacting with the people, that plays a huge role. That's why the bulk of our fund is not, we could do a totally automated process, right? Where we just make signatures and send money. But it wouldn't be complete. It would miss all this part, right? Where there's really important, there are factors that strongly correlate with how the company is gonna do, that you cannot obtain them in a digital way.
Thanks very much.
Yes, we agree with you, Armindo. I think at the end of the day, the decision making is done by getting to know the entrepreneur, seeing him, and I think this is really important. And And again, business angel investment is, of course, to get a fair return. But at the end of the day, that's the angel part. You are really so happy to see innovation coming, and it's really something very important. You support innovation and being able to understand and to see the team is really important. Even if we know that there is only one person or two sitting at the board, as Armindo was mentioning, and all the co-investors are sitting in an SPV and not really in direct contact with the entrepreneurs. But that's it. And again, I think that this is the power also of being so many investors, that at the end of the day, you are able also to open doors and to really link the entrepreneur with people that could really be a good, very important for their business development. So that's also very important. And again, AI cannot really do that. If you have to call the CEO of a large company, that's not done directly by AI. And so at the end of the day, yeah, human is so important, and this is what we love when we are investing in these early stage startups.
Until the CEO is an agent. Until the
Yeah.
CEO is an AI agent. Then it's
Could be.
We've got a question here from our audience. So Mujan Ashkari, do you want to put your question?
Hello. Hi, can you hear me?
Yes. Do you want to
Yes.
show us your face, or you can remain anonymous, whichever you prefer?
I just turned on my camera. I don't know if
Hi.
it's showing. Hi. Nice to meet you. I'm Mujan. Actually, our company Thousand Faces is very similar to what you're doing, Jenny, for the women and angel investing. We have an investment club and so on. And actually, we have a project with the University of Aix-en-Marseille to work on AI applications for VCs and angels. And we just started this project, so it's so exciting, this conversation here. I was wondering if from you, Alain, Armindo, or Thomas, if you suggest any tools that we could use that are already running, that we can test them. I assume you create your own in-house AI models or running it on LLMs. So I'm just wondering if you recommend anything that is already there that we can test it with our community.
Advice, anyone?
I can tackle that first. It depends on your strategy, right? Like, do you want to do discovery at scale? Then you probably need tools that are aggregators of information, right? And then if you want to run your own models, you probably want like a very large database, Crunchbase, Dealroom, for example. PitchBook is very good, but not so good in terms of API access. You would need some API access to actually get the data set. Do you have a certain type of approach where you actually don't mind that data is created by the vendor? Then you can go for tools like Spectre and Harmonic. Those are similar to the ones I mentioned, but they actually enrich the data with their AI models, for example, to detect something about the founder, like this person has been, they may be automatically classifying that this person has had an education in a top tier university, or that this person is a seasoned founder, or, you know, classify the products that the company may have into different segments. If you don't want to do at scale, you have a very specific thesis, maybe that's more appropriate for angel or for a specialized, a verticalized VC. Then you may want to impose your thesis. Then you may want a certain LLM. For example, even within OpenAI, you have this Pulse feature, which is recent. You want to get some automated report of companies that fit a certain thesis. That's another approach. You may want to have a thesis where you want to follow successful VCs or successful founders when they go stealth, when they leave companies, when a VC follows a company. There is one in the UK, it's Landscape VC. I think they now rebranded They have a tool called AIM-EVC that does that. There's another one called Signa that does that. Do you actually want to be much more sophisticated and you want to map companies similar to a specific company? Those vendors will also give you that, or you can use embeddings models from folks like OpenAI. Do you want AI-driven portfolio reporting? There's Standard Metrics, I believe, is doing a lot of work on this. But it needs to first, there needs to first be a strategy of investment, and then pick the right tools for that. Not just, okay, I'm going to use some nice tool that classifies company or tell me companies. It really depends, like at which scale you're going to outreach, what's your budget, etc. Right? So all these things need to come into consideration. There's more and more to just. Not only we're building these things, but we're also investors. And I can tell you, I probably already had pitches from 20, 30 companies that basically do AI for VC, for different VC operations.
Yeah, that's a new, that must be a whole new area. Alain, did you want to add anything?
Maybe. You are based, Mujan, in Aix-Marseille. This is what I heard. No answer. Okay. Anyway, so
yes, I think she did say Aix-Marseille.
Yeah, I would advise first to really use. I mean, there are plenty of LLMs available, and probably a tool that will help you to just use the best tool available. So, in Paris Business Angel, for instance, they are using JEDI, which is a SaaS platform to just transform GenAI into operational reality. So it's a way to really get access to already available products. But then you have also, and I know that they are really working on that as well, to create your own data and use, as Armindo was saying right in the beginning, to really grab data and create your own tool. But it will take time, and as Thomas mentioned, you have also data privacy, and so it's not that obvious at all. So probably start first with already available tools, and then go for that if you need it. But and then the cost to do it could also be important. So I don't know if it helps you, Mujan. Does it answer your question?
She's gone quiet again. But
okay.
I think we can also conclude that Mujan is also working with a community of women, 1,000 faces, or diverse, very diverse communities. So that would definitely be your starting point in terms of refinement of your of your data. Because I think that's another great exciting challenge for us all who are particularly wanting to source great women-led deals. That's a big opportunity for having very strong search criteria. I think there's a lot to be said for that, for gender-focused investing. So any other questions from anyone in the audience? I'm trying to feel free to put your hands up.
Maybe Thomas has also some experience of tools used, because you have been doing a lot of research in the past 6 months, as you mentioned. So probably you have also grabbed some tools and things.
To divulge any of your insights on this one?
The tools.
That was to me. I mean, we've looked into it. My co-authors have a better memory of the specific tools, so okay. I don't have them right here. But very happy to put anybody in contact with my team.
Thank you. Excellent. Thank you, Thomas. Anyone else got any practical questions or comments or views? We have a really wide audience here, and you're all sitting quiet. I wanted to take a bit of a straw poll, actually. Can we have hands up for everyone?
Question.
Oh, here we go. Luigi's coming forward.
I was raising the hand, and thanks, Jenny, and thank you all for the very interesting presentations and insights. As you know, with ESIL, we are particularly keen looking at deep tech and very early stage type of teams. And when it comes to those teams, your investment criteria should be really based also on some level of scientific excellence, or what they produce and what they could produce. But as they are mostly dealing with disruptive technologies, it's not so much what they've done in the past that counts. So it's not because they've been a great researchers and they have so many publications and they are top of Google Scholars and so on and so forth that is indicating that they will be the best choice in terms of the new disruptive team you want to invest in. Any idea on that, or what do you think AI could do also about what Professor Hellman was saying about this combination of gut feeling and some cognitive use of AI?
Thomas, do you want to try and answer that one? We're talking about really early stage, really early stage in the research community. Yes.
Yeah, I think first there are parts that I think lend themselves very easily to data analysis, analysis of intellectual property portfolio. I think it's relatively easy to compare an innovation of a deep tech team relative to the state of what else is happening in science. And I think the tools are very naturally important for that. There is a curious challenge that exists, I think, in deep tech, although frankly, I think it exists elsewhere too, which is data is valuable when it has recent. And there's a real challenge in using AI in the whole venture arena, that it actually feeds on data that's out of date. And then it makes inferences on the model that was true 5 years ago, because our data is historic data, and it leads to the wrong conclusion. So I think one has to be very careful. I think it matters in deep tech, but frankly, it matters in software. It matters pretty much everywhere, that the data that's used for evaluating is recent.
Mm-hmm. Okay. Armindo, did you have a comment?
Yeah, those sectors are always more difficult. For example, when I say that we are sector agnostic, we are, and we actually have deep tech investments, but it's like the bar is higher there simply because those things. It's not the same as trying to identify how good the consumer company is. Some company doing software, etc. There's the whole part of patents. There's all of that. So it's definitely more difficult on that. But a simple example of using it is that in such sector, the investor should have some kind of expertise, right? If you're just gonna try to look at some data points and do investments in deep tech, good luck, right? You probably have some expertise to start with. And if you have some expertise to start with, you can always do one of the examples I mentioned, which is that should be very thesis driven. So a simple application is, I actually know about this area. I actually think this is the type of solution, or this is the set of types of solutions that will flourish, and let me try to programmatically find companies that fit that thesis, right? Which may not be as obvious as it seems, right? And that's an example of one you can use. That's one of the best examples of how to use within AI, use LLMs to aid this type of process, right? You have a certain view that a certain type of technology should work, or one of these 5 technologies should work, right? And you use this to really narrow down the field. Once you narrow down the field, your insights come in. You try to engage with those folks. You try to meet them. You try to have calls with them, and you try to gain more information. That's a simple example of how to do this. If you don't, besides that part that has to do with specific expertise, you can still try to look at stuff. Okay, maybe this company is good or not, but this kind of investments could generate which type of returns, right? What's the power law there, right? And which kind of plays are more, it's more likely they could generate a certain return if they work, right? So you can play this game, but it's obviously different from having mobile app data or having certain consumer software metrics, etc., where you can just use at scale these type of models.
Mm-hmm. Thank you. Alain, did you, as an active deep tech investor, do you have any thoughts?
Yeah, and again, Luigi, your question is a very valid one, and deep tech and early stage investment, I mean, you have very few things available, and you have to really read and see the publication in well-known scientific journals to see the accuracy of the thing, and then having the names of people, and that's it. And you already can do that. And I would take an example. So I was last Friday in an oncology congress, and we're discussing with researchers, with oncologists, key opinion leaders, and they know each other from all over the world. And so I saw a guy who was developing a platform for supracellular modeling for cancer normalization. The way is really to use biology not to really kill the tumor, but really to normalize the cancer. So it's a new thing, completely unbelievable. And again, I mean, if you use AI to know what it is, people will tell you, no, impossible, or biology is not doing that, and so on and so forth. So especially in the early stage, I mean, AI could help you, but that's it. And you should really rely on your gut feeling and the way the guy is really expressing himself, and the proof that he has already done, and the trials he has done, and the model he has done, and so on and so forth. So that's a very good question, Luigi. Thank you.
Okay.
Yeah, so AI can help so well, but we need the knowledge and the, we need that understanding alongside it to filter it correctly. And Thomas, is your model about, you can only understand the team, you have to then unpick all of that again to create a whole new AI model to help you really evaluate all of those instincts that you've used normally to do that Alain would obviously want to still implement, I'm sure. So yeah, very interesting. Any other questions from the audience? We've had some great questions so far to join our debate. Feel like it can be a comment. So I'm just checking.
Jenny, I wanted to say
there
are questions in Q&A section.
Right. Oh, fantastic.
So there are two questions, and one is in chat as well.
There we go. Brilliant. Thank you so much. So Moujin has gone. So we've got Greg here. Oh yeah, this is an interesting one. I don't know whether you want to actually put that question, Greg, or would you like me to read it? Are you here? He's going to hide, or you're going to put your hand up. Okay. Hey, Greg. No? Okay, so Greg says, how do you find so many initial potentials? It seems like such a huge quantity that you're having to do. I think we talked a little bit about this as well, Armindo, didn't we? Like when you have so many, when you've got so many potential deals, I guess talking about this from an angel perspective, any advice on how to address that? Because clearly once you open this up, there's no end to what you... Is it about what you put in rather than what you get out? What's your thoughts on this?
How do you handle so many leads, so many
potential leads? I think is exactly the question here. Yeah.
I think things need to be, they need to have some inner consistency, right? So are you doing this game alone? You should probably go one way. Do you have a budget to actually have tools and technology? You can go another way, right? We look at so many companies, but we needed to have the expertise to actually build our infrastructure, not the hardware part, but to actually build the software part of the infrastructure and so on. And so there's, we have a certain budget for engineering, for data science, for quants, etc. We have all these folks in our team. Right, so it makes sense for us because we're going to play a game of investing in 20, 30 companies per fund, and we allocated a certain budget for technology and for this research and so on and so forth. If you're an angel, maybe you shouldn't try to classify 6 million companies, right? Maybe you should have some insight in some kind of playbook of where you want to invest in, and then actually when you apply this kind of machinery or some simple version of this machinery, once you do your 1% reduction or whatever that is, maybe those are 50 companies or 100 companies you can actually look and judge and engage with and so on and so forth, right? Obviously, I told you that we engage with 10,000 companies yearly. to achieve that, we need to spend 0 time in operation, right? Which means that we're going to have a lot of development in automations, right? I can give you an example in Chamaeleon. The first time that someone from investment team engages with the founder is to reply to his or her email, right? Because there was already a selection, there was already an automated campaign, there was already an assistant. At some point, the founder said, yeah, sure, I'm happy to meet. And that's when you enter, right? So if you can't do this, obviously you cannot engage with so many founders, right? So it needs to be consistent, right? Like which kind of time you have for this, which kind of resources you have for this, etc. And then you should look for the strategy that you can play with, right? I don't think it's a great idea for a solo person busy with some professional activity, to try to map out. Like it's much better to do things better in pardon for the repetition, in a much smaller subset than just to do not a good job over millions of leads, right?
Thanks. Alain, did you have any comment on that? This is, as an angel, finding, the deals and having that level of opportunity.
Again, I mean, Armindo was really right. I mean, when you are investing even in a syndicate, you are a group of people, and I don't think that it will be feasible to really do this sort of screening all over the world. And at the end of the day, I think that back to what Thomas was telling, that's a gut feeling, and you have to decide. And I mean, that's your own money, and you want to really sustain this company and do whatever is possible to really grow it and give it in a good shape to the other investors and make an exit. And that's another story where really I think AI can help. Maybe Armindo, you would like to comment on that, the exit opportunity.
It's totally it's totally underestimated, right? I think we had an example, right, in 2020, in 2021. Can you hear me? Yeah.
Yes, we can.
Yeah, the big example in 2021. It's an institutional example. It's not an angel example, but it serves as an anecdote where biggest firms in Silicon Valley missed the best environment ever for exits, right? And they didn't exit their positions, and 1 year later they were worth 10 times less. Right, okay. It's totally underestimated, even by your Sequoias, even by your Andreessen Horowitz, even so. If they underestimated, imagine the rest of the people, right? So, but it needs to be thought about since the beginning, right? Because you may be entering an investment that is very attractive and can grow a lot, but there is no exit strategy. That company will never become public, and it's very hard to see how it could be acquired, right? Yeah. And so, you see it growing a lot. You have what is called TVPI. It's fantastic, but then there's no money out, right? So all these things need to be considered. It's something that we built. We built a liquidation engine for this to help us determine when is the best time and when should we try to see if there are opportunities to exit, right? But that one is hard to do without data. Right, because you need to understand some stuff about macro factors, and you need to understand, if you try to really exit through some secondary, which kind of discount you'll have on that, and where is the market going as a whole, and all of that. It's a complicated problem. That if this was a course, that would be like in the last year.
Yes, absolutely.
Of that probably for Thomas, the subject of really Thomas, a good work to be published.
So, Thomas, did you look at the exit end of the market when you were doing this?
Very little. I mean, I think what Armindo is saying is fascinating. it goes back to actually something I've been claiming about the venture capital industry, is that's an industry that doesn't fully understand its customer. The customer of the venture capital firm is the acquirer, because they're the ones who are giving you the check. And I'm delighted to hear that Armindo is actually putting, some data onto that. I think this is an area where we're not seeing a lot yet, but I definitely think there's a huge margin of improvement.
Oh.
Thank you. Well, since liquidity is such a holy grail for the angel community and the venture capital community, I think that's definitely the case. I think probably we are coming up to the end of our question time, but if there's any other questions, do raise your hand. I can't see any more in the Q&A at the moment. But I actually think this has been a really fantastic conversation. I wish we could, I think I want to kind of capture this now and then see where we could take it, particularly. I think there's a really big opportunity for us because we're a very big cross-border community here as well. And I think that's, we touched on it a bit, but I think there's a lot more to explore around that whole connectivity, across deals, and then, that co-investing. And by the way, Thomas, I think my final point around the angel VC community is that we are actually getting closer, not further apart. We spend so much time together because the relationship between the deals angels do and the deals that VCs do has become more and more close, including our co-investment opportunities. So I think the way VCs are approaching AI is probably going to have the angel community following too, just because we need to have that very, very strong alignment in our approach. Or they'll be, how did you find that deal? Because, I did all this AI and, look what you used, your gut, Alain, So I think in the end, this will be a very important factor for us. But when we come to working cross-border, we're dealing with, first of all, the range of opportunities, but the range of investors and perspectives and decisions that we all want to work with. And, that's the rich part of what we're doing here in ESIL, and really has been one of the great benefits of our relationships that we've been building over these past months, working, with Central and Eastern Europe, and indeed building many more connections and relationships across Europe. So I hope that we can use AI productively and to really, really boost our connections and our relationships together, because that will strengthen the whole supply of equity to founders, will it not, from startup right through to scale up. So with that, I really want to thank you, Thomas, for your fantastic insights, which really set the scene for our debate, and some really, really interesting points. And Armindo, thanks so much for joining us and giving us that really deep VC perspective, and the way you're using data and really, really helpful advice to everyone who's starting on this. And Alain, bringing that huge perspective and experience as an angel, and working in at so many levels as an angel investor, has been really, really interesting to us all. So what we do know is it is here to stay for quite some time. I think the AI bubble itself for investors is one thing, but the AI for investors and doing investing is a very different opportunity for us all. So I would certainly like to thank you, and thank all of our audience for joining us today. What a wonderful group to have, to know we've got such a strong group of people listening to this, and I hope you'll take away some great thoughts about how you're going to implement AI, and also taking some of the precautionary measures that Thomas has alluded to today. And thank you for everyone, and thanks also for my colleagues at ESIL, BPI, Meta, and BAE for being part of this. So with that, I wish you all a great evening now ahead of you, and successful turbocharged AI investing to you all. Thank you. Bye-bye.
Thank you.
Bye-bye.
Bye-bye.
Bye.
Bye-bye. Bye.